Welcome back to the channel, everyone. Today I'm going to be giving you my top 6 high growth stocks to buy in December 2020. There's some very large and well established stocks in this list and some smaller, less established stocks with huge growth potential as well. Obviously investing in stocks is very risky and therefore this video isn't financial advice, it's just me documenting my journey investing in stocks and giving you some suggestions of what stocks could experience high growth. But before we get started, only about 17% of you are actually subscribed to the channel, which is really low. So subscribe, it's free and you can always unsubscribe later if you want. Now let's get into the video. So let's start by quickly recapping some of my stock picks from the other month. Bloom Energy has increased nicely from $15 up to $25, and Fastly has also increased nicely from $92 up to $126 before falling. So hopefully you sold when the stock had made a 30% gain and didn't continue holding. Upwork more than doubled from $15 a share up to $34 a share, and HP also saw a small increase from $19 up to $22. But unfortunately the Intel shares fell after some bad news announcements. But enough of that. Let's talk about my stock picks for the month of December 2020. And we'll start off with my first stock, which is Li Auto. So Li Auto manufactures electric vehicles like Tesla or NIO or XPeng. But actually, their cars look pretty good. The car looks like a bit of a crossover between a Volvo XC90 at the front, a Porsche Cayenne at the back, and the interior is pretty similar to an Audi SQ8. Now the performance stats also aren't that bad. Better than any ICE manufacturer, but obviously they don't quite rival Tesla. One of the main advantages is that Li Auto is a bit of a dark horse in the shadows. Obviously Tesla receives massive amounts of media attention, and NIO has also been receiving a lot of media attention, especially on YouTube, being covered by YouTubers like Meet Kevin, Jeremy from Financial Education, Zip Trader, Tom Nash and more, whereas obviously Li Auto's hasn't really been covered by anyone. That's a good thing because it means the Li Auto stock hasn't yet been pumped up super high as a result of all the hype, and that's yet to come. And maybe when some more YouTubers and mainstream media outlets get onto this company, then the stock could really start to rip. If we take a look at the stock chart for Li Autos, we can see that the stock was trading around this $15 range before increasing up to this $40 range. Now obviously that is quite a gain, more than 2.5x, but compared to Tesla and NIO, it's a relatively small gain, as those companies have experienced 10x growth and 8x growth in the past year alone. And therefore we can see that actually Li Autos might have quite a far way to grow still. If we look at the Q3 financials for Li Autos, we can see why the stock has started to grow and why it's likely to continue growing. In Q1 they produced and sold around 3,000 vehicles, in Q2 they increased that to around 6,000 vehicles, and in Q3 they increased that to around 8,500 vehicles. So obviously their production capability is increasing massively and we could see those numbers continue growing even higher. They've also been increasing sales rapidly by about 30% a quarter. Gross margin is also on the rise, up from 14% in Q2 to 20% in Q3. The company is still loss-making, but considering their margin is rapidly improving and sales are also rapidly increasing, I expect the company to be profit-making pretty soon. Li Auto is also financed by the company that founded TikTok. Now that doesn't really mean anything, but it is good to see that the company are backed by a very large company that are obviously trying to diverse and invest in potentially successful startups. They've also recently signed an agreement with Nvidia to use the company's latest chips in their car operating system and also help them on the race to autonomous vehicles. Now this is obviously very good, and that's why I think this stock could definitely increase from the $40 mark up to the $80 mark and maybe even higher. If you're looking for somewhere to buy the Li Auto stock or any of the other stocks mentioned in this video, then be sure to sign up to FreeTrade using my link down below in the description to get a free share worth up to £200. FreeTrade are a really great platform that's super easy to use and offers commission-free investing. The next stock on my list is Etsy. It's the business-to-business version of Alibaba, similar to eBay or Amazon apart from it's based in China, and sellers can sell directly to businesses as well as customers, usually focusing on handcrafted items. Looking at the stock chart for Etsy, we can see that the stock's been increasing steadily over the past 6 months, recently setting new all-time highs, and quite rightly so. But I'm sure if you know me, I don't just like to do a little bit of technical analysis and look at a chart, I like to look at the fundamentals of a company as well. Etsy has been increasing steadily over the past year or two due to it being one of the best resources for dropshipping. All of those YouTubers that make dropshipping videos like Bia Heza, Hayden Bowes and others have really helped form Etsy into this super popular company that it is today. It's also now on the run up to Christmas, which means that Etsy is entering its most profitable quarter. If the company has a good quarter 4 and beats the experts' estimates, then the stock could react well and rise quickly. Because of the current world situation, especially over here in the UK as we've just come out of a second lockdown, it means that people aren't really going out onto the high street and shopping in person anymore. That's why Etsy has had a great year due to this rapid increase in online sales. The company is also in a great cash position with around $1.1 billion of cash. Yes, I realise it says $1.1 million, but the accounts are in round thousands and therefore it's 1.1 billion. The company does have quite a bit of debt, with around $1 billion of debt, but because of all the assets, the company is net positive. Revenue for the first 3 quarters of 2020 has doubled compared to the first 3 quarters of 2019. Margins are also up and therefore profits have actually quadrupled. To be making $200 million of profit on about $1 billion of sales is a very, very good margin. Etsy don't pay a dividend, but they have been venturing out on a stock repurchase program, meaning that there's going to be fewer shares in circulation, just further pushing up that stock price. Stock number 3 on the list is Netflix. Now I'm sure you all know what Netflix does. It's an online streaming service and a content production company. Netflix have also had a great year so far as a result of the pandemic because everyone's been stuck inside watching movies. And we're now getting into the best movie period of them all. Christmas movies. These are without a doubt some of the best selling movies ever, and that's why year after year Christmas movies are always top sellers and best sellers, and Christmas music always tops the music charts. It's a festive period after all. Netflix's financials are also looking very, very strong. Revenues and profits have been growing every single quarter this year. Quarter 1 revenues in 2020, its usually lowest earning period, were even higher than quarter 4 revenues in 2019, usually its highest earning period. This is therefore a great setup for quarter 4, and revenues could even break past that $7 billion mark. Margins are also up as well, as Netflix has cut its marketing budget, but yet is still making even more sales. I guess it's kind of getting to that point now where everyone in the entire world knows who Netflix are, and therefore they don't really need to market quite as much. In terms of how the stock chart itself is looking, the stock has been trading in this range between $480 and $560, and it's currently near the bottom of that range at $490. It's also just recently moved under that 50 moving average, and therefore the stock is really well poised for a nice move up back to the highs or maybe even past the highs on good quarter 4 results. However, I do think that in the longer term the Netflix stock could fall, because when a cure is announced and everyone feels safe to go back outside again, they won't need to spend much time inside watching movies and therefore might cancel their subscription. So therefore I think Netflix is a bit more of a shorter term play. My next stock pick is more of a collection of stock picks that I'm going to call COVID stocks. Basically just any stock that was hit really, really hard as a result of the pandemic and is still yet to fully recover. Stocks like Boeing, Carnival and Barratt Developments I've been calling for months, and also other companies like travel companies and event companies are all starting to see a really, really good rebound, with most of these stocks gaining around 40 or 50% in the past month alone. I think we're starting to see the revenge of the COVID stocks, and I don't think it's done yet. I think these stocks could continue growing, especially through December when we're probably going to get even more announcements of a potential cure. On top of this, the UK is just coming out of its second lockdown, and most other countries in Europe are also following suit. This means that hopefully more and more countries will be coming off the restricted travel list, meaning there is going to be a much greater need for travel companies, aeroplane companies, and event companies and other bits and pieces like that. I would strictly try and focus on those companies that do have a really, really good track record of survival, like Barratt Developments or Boeing. These companies are almost guaranteed to survive the pandemic and therefore are probably much more of a safer bet. The 5th stock on my list is Gap, the clothing brand behind Old Navy. Now you might think that this is a bit more of a riskier play, going for a clothing company, especially as the high street is kind of on the way out and is kind of dying and online sales are taking over. But Gap is a little bit different. The stock has actually been performing surprisingly well during the pandemic, actually generating profits and generating cash rather than burning through cash quicker than the Arcadia Group. The stock itself has been increasing steadily over the past 6 months, apart from it recently took about a 20% fall after some missed earnings estimates, and this presents a really good buying opportunity. It's not like Gap is going bankrupt or there's some massive lawsuit which could bankrupt the company. It's just that the company only generated $4 billion in revenues and only generated $100 million in profits instead of $105 million in profits. Must be the end of the world for them. In terms of those headline figures, they generated about $4 billion in revenues in Q3 of 2020, which is actually about the same as Q3 revenues from 2019. So we can see that recently the pandemic hasn't had much of an effect. The company for this whole year is running at quite a loss because of the lockdown, but they have managed to stay afloat by issuing new debt, meaning that the company is very cash rich. Gap has been proactive as a result of the pandemic, garnering over 3.5 million new online customers, and that's why sales have stayed quite high as online traffic has increased by about 70%. It means that so far Gap have survived the pandemic, which is much more than can be said for some of the other companies out there that haven't survived, or that have been acquired by the treacherous Sports Direct Group. This basically means that Gap has a whole new wave of customers that it can acquire and boost revenue and profits. Gap have also just stuck a 10-year clothing deal with Kanye West for a new clothing line, Yeezy Gap. Knowing the profitability of the Kanye West-Adidas partnership, this could be one of the best decisions and one of the best wins that Gap have ever had. And my last stock for December 2020, stock number 6, is Plug Power Inc. Plug basically develop hydrogen-based fuel cells, meaning that they're doing what Nikola Motors could only ever wish to do. Looking at the stock chart, this company has already increased pretty massively, trading at around 9 times what it was trading at 6 months ago. This company has doubled its revenues in Q3 compared to Q2, and that's why it's growing so fast. They've also increased their deliveries very rapidly as well. In the whole of 2019 they delivered around 5,000 fuel cells, whereas in Q3 of 2020 they've delivered 4,000 fuel cells alone. They've also increased their product offering from forklifts and other commercial vehicles to do trucks as well. They've already got a number of large customers like Nike, Walmart, BMW, Home Depot and more, and it's likely that they're going to continue gaining even more large clients as the alternatively powered vehicles market increases in size. The market for ICE vehicles is expected to decrease massively over the next 10 years, and the sales of electric vehicles and hydrogen-powered vehicles are expected to overtake. There's a lot of predictions about just how big the hydrogen-powered vehicles market could get, but it's likely that it could go from the hundreds of million dollars range in 2019 to the multi-billion dollar range in 10 years' time, with some predicting up to even around 30 billion in sales. And there we have it. There's my top 6 stocks for the month of December 2020. And as always guys, if you enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!